Good day, friends. My name is Ilya Balaknin. I am the head of the agency Paper Planes, and today we will talk to you about a very important and very difficult topic, the topic of customer experience management. Regardless of whether you represent a B2C company or a B2B company, irrespective of whether you work with a relatively small circle of major clients or establish relationships with a large number of small counterparties in your business operations. Regardless of this, you must definitely take into account the wishes and needs of clients in your work in one way or another. In reality, the subject of customer centricity, customer orientation, customer service, and customer satisfaction are subjects that occupy the thoughts of marketing, specialists, customer service departments, so-called CX departments, business excellence departments, and so forth for a considerable length of time. However, only recently has an approach been developed within which an increasing number of companies have started to transition from a product-centric approach, where the creation of such a first-class assortment matrix and timely introduction of new products to the market were considered a key element and factor of success, to a situation where customer orientation is starting to be seen as one of the core factors of success. Undoubtedly, you must have heard of metrics like NPS or Net Promoter Score or CSI Customer Satisfaction Index, and there are certain companies that genuinely measure them on a consistent basis. However, our conversation today will not be about these metrics. Why? I in no way argue that having these metrics is better than the complete absence of any metrics. However, as is frequently the case, NPS and CSIS metrics are quite generic, quite general. Do not give an accurate idea of what exactly to do. As you probably know, the Paper Planes approach is based on the simple idea that we need data not so much to measure progress or measure success, but to understand what management decisions we can take with you. In this respect, today we will become familiar with such a fascinating product, if you prefer, that we execute in our practice for our clients. This specific item is commonly known as CXM Customer Experience Model or Customer Experience Model. In its essence, CXM represents a more mature, more mathematized version of the customer journey concept. If customer journey enables us to address the question of how a customer makes decisions and provide assistance to him in making these decisions. If you are not familiar with the customer journey model, you can either become participants in our course called The Route is Built. You can now see the link on your screens. You can get acquainted with my book, The Route is Built. Our website, you will find a link to them in the description below this video. Customer experience, in turn the customer experience model, it rather emphasizes how we can predict customer satisfaction or dissatisfaction. In this video, we will explain how to reach there, but first an important note, customers' questions are not a secret. It is not a secret that customer service issues, customer satisfaction management issues, can often be perceived as, in the worst sense of the word, hype. Many companies believe it's necessary to please customers, treat customers well, so investments in customer experience may seem essentially a tribute to fashion's influence. However, our implemented projects for different companies from various segments, markets, industries, and clients demonstrate that customer experience management is not just a trend, but also an economically beneficial event. This event is beneficial because it positively impacts an important profit formula indicator like LTV, lifetime value, customer lifetime value. For instance, while analyzing the economic outcomes of firms that adopted customer experience management strategies, we attempted to construct a factor model that could explain the primary factors influencing customer lifetime value, LTV. First and foremost, of course, there was accurate pricing. And indeed, accurate and efficient pricing is a highly significant factor that impacts customer lifetime value. The second most important factor turned out to be the company's readiness to take into account the special wishes of the largest clients. In terms of, let's say, some nuances of production, delivery nuances, nuances of some physico-chemical properties of the product, and so on. And in the third position, there was the story regarding satisfaction from the perspective of customer experience. Thus, as we see it ourselves, customer satisfaction from the point of view of customer experience is a good predictor of LTV, which means a good predictor of revenue, which in turn is a good predictor of profit. Let's attempt to determine how companies can construct a customer experience model, how to begin implementing it, and why it is crucial to do so in any case. The initial step in establishing a customer experience framework is to define all the categories of our processes that have the potential to influence customer satisfaction. How to do it? First of all, it is necessary to catalog all processes if they have not yet been described, or to take an existing catalog of business processes. Now you have the ability to see on your screens a comprehensive list of business processes that typically have an impact on the customer experience. You notice this list is diverse, with B2C companies' processes and B2B companies' processes included. And simultaneously, pay heed. These processes are spread across stages of the customer journey for us. So there are indeed processes that are more tied to the beginning of customer interaction, that is, to the early stage of sales funnels. There are processes that allow the client to make a choice between us, competitors, or companies that provide alternative services or products. There are processes related to the experience of interaction, and there are processes associated with after-sales support. By the way, when we created such a catalog of processes with you, we get the first starting point for our customer experience model. We acquire knowledge on how to link process data that we gather regarding the advancement of our processes and client information, primarily payment or satisfaction data that we can obtain from CRM or customer requests. Thus, we obtain a connection between process data that we can collect in various systems where processes are registered. These can be ARP systems, some MES systems, SCADA systems, and client data, which can be transactional and recorded, for example, in CRM, and data, so-called customer experience, that is data from, for example, surveys that we regularly conduct. So this was accordingly the first step. On the second step, we need to acquire knowledge from you in order to fully comprehend which specific properties of these processes are of utmost importance for our counterparts. Also for B2C, it's often enough to survey retail customers in order to gather sufficient data. This can be done most easily by weighing the responses of clients in some way, for example, using the QFD model. If you are unfamiliar with the QFD model, then you see a link to a separate video on the QFD model on the screen. And below this video, you will discover links to materials on the application of QFD in the retail business. If we are talking about a B2B company, then you should consider the following nuance. The thing is, any counterparty in the framework of B2B negotiations is rarely represented by a single decision maker. As a rule, this is a kind of collegial story. And in the decision-making process, three completely different types of buyers can be involved at the same time. The initial type is referred to as economic buyers, individuals who purchase money in exchange for money. Those who are innovators, and in any of our business processes, in our product, in our services, the most important thing for them is the return on the investments they make. The second class is technical buyers, those who are familiar with the class of our products or solutions and are looking for the best available standard on the market. If economic buyers attempt to obtain money for money, then technical buyers strive to acquire a superior standard that is currently available on the market. Finally, the third class of participants in negotiations from the side of a potential client or an existing client are end users, those who will either use our product or service on a daily basis, or those who already use our product or a competitor's product on a daily basis. Therefore, when we first compiled a list of all processes that affect the customer experience, if we work in the B2B market, we need to determine what affects customer satisfaction in the B2B market, and for these specific processes under this three-level, economic buyers, technical buyers, end users, establish the most significant aspects of the process flow. This is made possible for us by the so-called Bain value pyramid. Now on your screens you can see this pyramid, but you can see that it has quite a lot of sections. There are several dozen of them. And in order to get better acquainted with all the elements of the pyramid, you can, in fact, find the corresponding material and download it by following the link in the description of this video so that you can get more familiar with it in your free time. Meanwhile, we need to understand the main thing. The pyramid in this listed are some key points or factors that affect the satisfaction or dissatisfaction with a particular process. What are these factors? First of all, these can be factors related to basic companies' representations about cooperation parameters. The cost of education, reduction of constraints, quality control standards. These can be factors. for example, to increase productivity when using our product. Suppose the product can be seamlessly integrated into the client's system, the product can save the client time, the product can always be available from stock. Factors may relate to interpersonal interactions. For example, good or bad relationships have been established between managers on both sides. How culturally compatible are the companies? What is the amount that our company is prepared to guarantee to its counterparty, such as special non-competitive conditions or conditions of increased loyalty, some additional discounts, bonuses, implicit discounts in the form of special logistics conditions, and so on? In essence, such a pyramid can be used as a starting point for us to structure interviews with economic technical buyers and end users, making it easier for them to determine which components of the processes are most significant for them and provide answers to that question.